Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Alex Matthew. We've got quite the tasty lineup of stocks to talk to you about, but first, let me introduce my guest, Avinash Gorakshakar of Profit Mart, is joining me this morning. Good morning, Avinash, and thanks so much for joining me today. I want to start with the first or the tasty stocks that we have to talk about, and that's a stock that's done quite well. Jubilant FoodWorks. But the reason why we're talking about it is not pizzas. Today, we're talking about Jubilant FoodWorks because of biryani and the fact that Jubilant FoodWorks has launched a new brand called Ekdam, which will offer 20 different biryanis that have been curated from various parts of India. They will only start with 3 restaurants, though, in Gurgaon. So it's a bit of a testing of the waters, wouldn't you say? But is it also a fact that they're trying to diversify and they're trying to bring a little more Indian into their offerings, Avinash?
Yeah, good morning, Alex. I think my sense is, I think you're right, Alex, that this new brand, which is, the biryani brand, which is going to be called Ekdam, is going to be like a test launch for them. And most probably, it seems that the company management is trying to Indianize the menu because, their core business continues to be the Domino Pizza. And I think where, growth is definitely very strong and solid. So my sense is that it's too early to say what kind of impact it will make on the earnings or the revenue visibility on the part from this, newly launched products. But I think over the next, say, 1 or 2 quarters, one could definitely say one is what is the kind of response and what is the kind of scalability this product will hold. But nevertheless, it's a good development. They're trying to diversify their, food palette, and I think it remains definitely a small for the stock.
Um, okay, Avinash, can you hear me?
Yeah, I can hear you.
Sorry, there was a bit of an issue with your feed there. Unless I'm the only one who didn't hear that, you were saying that it's a positive development, but I want to hear from you with regard to the valuations, and this is something that a lot of people want to know about. Jubilant FoodWorks is trading pretty much very, very. You can't say attractive. It's a highly valued counter. It's gained significantly over the past several months, perhaps on account of the fact that a lot of people have been ordering in. It's doing quite well for itself. Would you say that you can still buy into Jubilant FoodWorks at this point, though, Avinash?
I think, Alex, as far as valuations are concerned, the stock seems to be fairly valued. And I think, the most important element why the stock has been doing well is that there's been a, sharp recovery in the quarter 2 compared to quarter 1 when there was a significant impact of the lockdown. I think quarter 2 has seen a resumption of, single store growth as well as margins have improved. And I think clearly the markets are looking at normalcy and better days ahead for the second half of FY21 and a very stronger FY22. But nevertheless, valuations seem to be quite expensive, and I would not be surprised that unless the stock, corrects moderately, I think it will not give you a decent risk reward at least in the very near term. I think there's no doubt about it that the business capital structure is extremely solid, and the brand pool is extremely strong. I would believe that investors who want to invest here should look at some sort of correction to enter the stock where possibly the risk reward would be better. The point which I was trying to make earlier was the new product which is biryani is basically a test launch, and I don't think it's going to add any incremental EPS gains at least for the next 1 or 2 quarters. So it's going to be a wait and watch, but the core business continues to do well. But yes, valuations seem to be a little rich, and I think only a correction could possibly offer a better risk reward, for investors.
All right, so let's quickly go to the second stock, which is not it's not a QSR company. It's in fact in the specialized chemical space, Navin Fluorine International, and we're talking about this because it's announced capital expenditure for setting up a multi-purpose plant with an outlay of 195 crore. Not the biggest outlay, but it's interesting that it's expanding capacity at this time. It's saying that the capex is going to be funded through a mix of internal accruals and debt. What's your view on this development, Avinash, and what's your view, in fact, on Navin Fluorine?
Alex, I think Navin Fluorine is one of those companies which is into specialty chemicals and which is into CRAMS and which has done exceedingly well over the last, say, 2 years. In fact, we have been seeing that its operating margins have actually expanded to over 25 to 26% because it largely operates in the specialty chemical space. And I think the order book on the CRAM side has also given it a very decent, kind of visibility, both on the top line as well as the profitability. So I would not be surprised that this capex which is being announced will largely be announced by a larger mix of internal accruals and very little debt on the project side. So I think investors who want to look at a strong lineup of growth over the next say 12 to 18 months could even look at the stock even at the current levels. This is a niche player with not much competition, and the markets have loved it. I think in terms of their ROEs, their return on capital employed, and plus their earnings growth, I would not be surprised that FY22 would be a much stronger year, considering that they've got a large order book on the CRAM side, and in the specialty chemical side, they are one of the niche players where not much competition is to be seen. So I think despite the stock having run up, I think probably this could be a good outperformer, but provided one takes a 18 to 24 month view.
Okay. All right. Which brings me to the last counter. And this is not a counter that is currently available, but the IPO is open for subscription. Today is the last day for Mrs. Bector. And we were speaking about this in the run up to this program, Avinash, and you were mentioning that Mrs. Bector is really running on the popularity that has been generated by the IPO of Burger King. Would you say that this is something that investors should consider, considering that it's the last day that is available? I think head to head it goes up against Britannia. How does it stack up?
No, I think Alex, if you look at the IPO, this is a very solid player in the the QSR space, and they do have a very large and a very quality lineup of clients like McDonald, Burger King. They also supply a lot of good quality biscuits to reputed branded manufacturers, and they are also present in the branded bread space. So my sense is the product categories are very encouraging and very promising, which should show very strong growth over the next say 2 to 3 years. Most importantly, I think we have seen that valuations of such companies have traded at very expensive valuations, considering that QSR and the food products category is showing one of the strongest growth. Now, coming to Mrs. Bector, I would say that valuations look pretty expensive at 54 times FY20 earnings, and therefore on a purely fundamental basis, it may appear to be expensive, but looking at the popularity and the success of the Burger King IPO, one could not be surprised that investors who apply for the IPO could possibly expect a very solid listing kind of upside immediately. Thereafter, of course, Alex, you would have to see the quarterly numbers, the earnings commentary. But I think longer term prospects appear bright. In the near term, I think it's going to be the listing gains which is going to drive the stock price, and obviously later on, I would not be surprised that the markets would be keenly looking at numbers. Now, comparing it to Britannia, I would believe that Britannia is a market leader in the biscuit and the bread category, and their working capital management is far better than Mrs. Beck. So I think it would not be wise to compare this company, but yes, definitely on a fundamental basis at the current valuations, those investors who want to apply for listing gains should definitely go ahead. On a longer term basis, I think one would have to wait for a couple of quarters before one takes a longer term call.
On those listing gains, it would depend, of course, Avinash, whether the retail investor gets an allocation, because it's already been oversubscribed significantly. But thanks so much for sharing your views. It's been an absolute pleasure speaking to you as always.
Thank you.
And to you, dear viewer, thank you so much for tuning in. You've got three interesting stocks that we've spoken about. One, Perspective, of course, with the IPO still ongoing, but do let us know what you think. In the meanwhile, check out the website, BloombergQuint.com, over the course of today for all the news and updates in the world of business and markets. Thanks so much for watching. This is Bloomberg Quint.